Hey folks, Dan Frio here, the Mortgage Update. Today is March 30th, 2020. Let's get at it. What I want to go over today is I'm going to go briefly over what's happening in the mortgage-backed securities market, and today is a terrible day. But tomorrow will bring a whole nother day, and it's basically a complete roller coaster. But I want to also go over with you programs that are being affected and what's happening with mortgage rates and mortgage lenders right now. Because there's devastation in the markets. So I don't want you to get blindsided. You're looking to refinance or you're looking to buy a house, and all of a sudden you're in the mortgage process, and then all of a sudden you get to the closing and there's no money there, or the closing people, they call you, or the attorneys say, you know what, I know you're supposed to buy your house today, but the lender doesn't have any money, or they halted the program, or the rates, just a whole bunch of things. So I want to kind of pull the curtain back on a lot of the mortgage stuff for right now. So, because I see a lot of posts and a lot of YouTube videos from realtors, people talking about mortgage rates and how they, it affects the markets. But this is a perspective of a mortgage person. This is what I do for a living every day, all day. I'm going to show you behind my computer some of the things that I do that I really don't share with you on a daily basis. And I've done this for 32 years. And, I do a lot of business, and I wear a lot of hats in this business. So my whole goal here is to educate you on what's going on. So let's get on to what I'm talking about with the mortgage-backed securities, and then at the end I'm going to tell you, especially newbies on there, I'll define a lot of these terms that I'm talking about so you get it. Because I want you, when you come to the channel, when you're done, I want you to get something out of it. So you're like, okay, I understand why that happened, or what's going on, or at least I get an advanced feature of what's meant to be or what's coming up. So let's see what happened today. So it's a fresh week. We opened the markets, and the markets opened pretty good. The Dow was up 187. Mortgage-backed securities were up 63. It's peachy everywhere. Stock market's starting to move back up. Mortgage-backed securities are going up. And again, we watch this number here. This is the price of what's going on with mortgage-backed securities. As the price goes up, we all know what happens. Rates come down. There's an inverse relationship. So we love when this number goes up. So basically, this is a bond. It's a group it's an investment that has a bunch of mortgages in it, and it sells on Wall Street or in mutual funds or to hedge funds or other investors. And the more you pay for a bond, so when the payments or the price goes up, the more you pay for a bond, like any other bond, the lower your rate of return, or the lower the interest rate, or the lower the mortgage rate. So we love when this number goes up. And right at the get-go, beginning of the day, we're up 63. And then you're going to see as the day goes through, the stock market starts to, housing sales were up good, so that's good. And it's still a backwards number. But then all of a sudden, the Dow kept going up and up and up, and mortgage-backed securities start coming back down. By 4 o'clock, the Dow's up almost 700 points. Mortgage-backed securities are down 45, and look where we are now. It's down 61. So what happened? Basically what happened is the Fed, they were stepping in last week, driving these numbers to unprecedented territories. And let's get to the charts right here. And I use this system right here to make it simple on you. And I'm going to show you what I personally use on the back end of this that gives me a little more detail what's going on. So mortgage-backed securities do this. This is the price of that mortgage-backed security. Okay, so as I was saying, as the number's going up, this is a stock, or just assume this is a stock. You love this number's going up. You bought, it was $99 here, then it was $102, and then right in here was kind of an anomaly. And this is basically at the point where we locked in almost all of our clients, okay? And then I'm going to explain something else to you, because you're going to say, well, rates should be better today than they were back then, but they're not. And that's one of the big features of what this video is going to be about. So We had a great run in the market. That day was basically like I said, an anomaly. And that's when the coronavirus started to hit and all kind of other stuff was going on. And I saw a big reversal that day. One of the biggest I've ever seen in my life. This was about an 80-point move. And since then, it's been dwarfed every day. But on this day, rates were under 3% on 30-year fixed rates, or right about there. Okay. Since then, we had a huge reversal in the market, and you can see it's all the way down to this level, back to where we were years ago. That's how much rates changed in a matter of a week. They went from, say, 3 to in the 4s and mid 4s. Okay. Then all of a sudden we had that reversal back, and what happened is the Federal Reserve stepped in and said they're going to start buying up mortgage-backed securities with basically an open-ended checkbook. They're just going to keep buying, thus creating big demand for the product. The higher the demand, the higher the price, which we want, and the lower the yield. But the problem that's happening is when we lock in your rate, we actually go and we hedge our bet by selling short mortgage-backed securities. And I won't go through that because it'll be an hour tutorial if I go through what shorting a security or anything is. Basically, we're betting that it's going to go down. And that's how we cover our position. When we lock in your rate, we're saying we're guaranteeing you have a 3% rate for 60 days. We go out there and we short the MBS market for your allotted money. So it's a $300,000 loan. We short $300,000 in the market. To just cover our position. And normally in a normal market, it works out very well. There's not a lot of profit margins there, but we don't really lose in the event that mortgage rates go up. Okay. Well, that being said, with the Fed coming in, look at these wild swings. Remember I said right here is an 80-point swing. I've never seen that in my 30 years of doing this. I might have seen it once. Now every day we basically go beyond that. Okay, that's playing havoc in the market. Okay, when we short that MBS hedge for your interest rate, we usually don't put up cash. We use margins accounts on it. Basically, we use a credit account. Well, as this volatility is going on, we're getting margin calls on our hedged short selling of the mortgage-backed securities. Bear with me, I'm going with somewhere on this. Thus, a lot of mortgage bankers are losing millions and millions and tens and hundreds of millions of dollars because of this volatility. That's the easiest way I can explain it. So a lot of mortgage bankers, and even big banks, big entities such as Quickens and the Mr. Coopers and that, I don't know fact in this, but everybody's feeling a pinch, okay, because of this. And you're going to see rates, or you've seen rates kind of spike in a lot of areas with a lot of lenders because they're just trying to hold off volume right now until all of this washes out, okay? So basically right now, rates are artificially inflated. I've asked my clients, hold tight, put your applications in, let's hold, because in the real world, rates, we should be about right in here, where rates should be on a 30-year fixed in the mid to low 3s. That's where we should be. And we'll get there once this dust settles, okay? But what I want to talk about today is, I'm not going to go over mortgage-backed securities any further. I want to talk about what's going on in the market right now. One big thing is I had a conference call and I had a lot of conversations with other lenders. And the FHA program, almost everybody in the market right now, there is no appetite for any FHA loans for people under a 620 credit score. So you're going to see almost every lender out there requiring at least a 620, 640. And in some cases, some lenders I've talked to are going up to a 680 credit score for government loans such as FHA, VA, and USDA. So if you're getting an FHA loan and your score is under 620, reconfirm with your lender that they are doing those loans. Okay, so that's one thing to watch out for. Down payment assistance programs, they're virtually gone. Everybody's basically shut their doors on those programs right now, saying, you know what, we're using our assets to help, our states and our people and everybody in different areas. We're going to allocate those monies in different areas right now versus down payment assistance programs. So if you were getting a down payment assistance program, please reach out to your lender if they're still doing those. I'm a lender, so hopefully you guys are dealing with me, and I'll keep you abreast of what's going on with all of this. But if you're dealing with somebody else, I don't want you to get blindsided. A lot of the boutique programs that even we offered, all those lenders, we call them non-QM. Almost all those lenders have backed out of the market right now. There's no ITIN programs. If you know the program, you'll know what I'm talking about there. There's no bank statement program. There's no lease-only programs. These are programs out there normally, but right now everybody is basically hoarding their cash. That's the best way to put it. All right. So what I did want to talk about is trying to help some of those homeowners and people out there. How do you get relief on your mortgages, and somewhere to be careful about? Okay, they came out with part of the CARES Act is saying that lenders are pausing your payments for up to 180 days. Okay, before you kind of just go yeehaw, crack open a beer and celebrate, be careful. What's happening in some of these, and I've called multiple lenders, is they're giving you the paused payments. It's just a pause. It's not a reprieve of it. So meaning after you miss or skip your 180 days, you have to bring your account current. So you have to send them, a check bringing yourself all the way current. I don't know about you, but if you're in a situation where you're not making any money right now, or you're waiting for your checks to start coming in from unemployment, and that unemployment check's probably not going to be enough to bring yourself current after 180 days. So be very careful. Call your mortgage companies, okay? It's like when the crash happened in 2010, millions of people lost their homes because they kind of got duped by the advertisements on a lot of mortgage companies, and I'll leave it at that. One of the ways I would approach this possibly is let's look to refinance you and do a few things, okay? Because when we refinance you, I can have it structured that you can miss two months of payments, mortgage payments, okay? How that works. Let's say you put in your application right now. We close you the first week of April. What happens is we cannot charge or make you make a payment until at least 30 days. And then all of our payments cycle on the 1st. So for example, if you close on April 10th, 30 days would be May 10th. Well, we don't collect payments on May 10th. We don't collect it on the 10th of any month. Like I said, we have to collect on the 1st. So then we have to go out to June 1st would be your first payment. So that's how we do that. You would skip your April payment, your May payment, you'd be first payment would be due in June. That alone probably can help millions of people out there. Another thing we can do is possibly you might be, or in many cases, most people right now are going to be living off of credit cards for the next 30, 60, 90 days. Why don't we look at pulling out some cash so you don't have to carry mortgage balance or credit card balances of $10,000 on a credit card that has a 25 or 28% interest rate when you can refinance in the 4s. So that's another thing that you might want to look at. Okay, so those two things alone, skipping 2 payments, getting a lower rate on your mortgage. So that's number 1 if we can do that. Number 2 or 3 would be consolidating as much debt as we can, especially those high interest rate credit cards, into a payment that's more affordable or a lot easier on you. Again, versus pausing your payments, waiting 4 or 5 months, not realizing we're going to have to bring that account current, and then all of a sudden your mortgage company sends you a statement that you owe $10,000 to bring your account current. And I'm warning you. I'll just say it that way. So like I said, I've done this for 32 years. I've seen all of this transpire, not the virus piece, but very similar situations to this in 2000 and 2008. And this is basically not much different than that, other than the government is kind of holding no ends on what they're going to do to help the markets. They made a knee-jerk reaction on going in and buying mortgage-backed securities, which was good to settle the market, but they went overboard and they overshot the target, and it's causing a lot of issues in the mortgage business that you, as the consumer, probably won't see today. But if you're in the mortgage business, you know what's going on. But if you're a consumer or realtor, you're going to see this pain kind of in the next 30, 60, 90 days. I'm just trying to forewarn you of things to come. So to recap some things, let me see if I'm going over anything. Rates are still phenomenal. I mean, they're good, but I think in the next 7 to 10 days, we're going to see a much reprieve of mortgage rates because a lot of this stuff is going to settle in. Here's what I watch, and now you know why I don't. Here, let's see what this says. For the second time since Friday, the Fed lowered their MBS purchases. So why we had here's an alert. What I was talking about is why we had this big dip in the market right here is the Fed started easing up on their purchases, and we just got an alert of that right here. The Fed's easing up on their purchases, thus giving a huge reversal on what happened in mortgage-backed securities. But this is the charts that I follow. And I don't post this every day because I don't want to confuse the heck out of you. You guys rather see that or that? Yes, it's that. So to recap, my name is Dan Frio. I do the mortgage update every day. You can hear me on radio in Chicago. I am on WYLL radio Monday through Friday from 7:30 to 8 p.m. I am on WIND radio Saturdays from 7 to 8 a.m. I'm a mortgage advisor, and I've done this for over 32 years. I consider myself a mortgage advisor because I do this. Most loan officers, they take your application. They're saying, I got 4% raise, that good? Yeah, okay, good. Oh, you could get you 3.75 if you pay this. Okay, good. All right, I'm going to put your loan in for approval. Most of them don't know the programs. They don't know. They can't tell you the difference between this chart, this chart, this chart, updates, all this other stuff. I do. You know, this is what I do, and that's why I'm blessed that you guys watch me, and hundreds and hundreds, if not thousands of people are using us to help them. I can do mortgages almost in every state of the country right now. Here's what I'm asking people to do. If you're in the process of getting a mortgage right now, send me what's called your loan estimate. And every lender has to send it to you. If you're working on it and they give you a pre-approval, they have to send it to you. Send it to me. The worst case scenario is I can't beat what they're giving you. In most cases, I'm beating the rate and the fees handedly. But if I can't, I promise you, I'll get back with you and say, you know, God bless you. You got the best thing out there. Lock it, take it, run with it, and be happy. If you have a mortgage right now and you haven't done anything yet, or you contacted, like I had a person today saying they have a VA loan, and they tried to contact their bank and to do a VA refinance. And the bank said, you know what, you filed a bankruptcy years ago and you haven't reaffirmed the debt. We can't do it. I can. And thank God he reached out to me because I'm helping him as we speak. So if you'd like to check out my services, please give me a call at 844-775-LOAN. That's 844-775-5626. Or shoot me an email at D for Dan, Frio, Frio, at preferredrate.com. My website is still not up yet. We're days away. I'll try to create a landing page. It just goes through and counts down to the day we launch. When we go live, you're going to be amazed on what we can do with technology. It's overwhelming. So I want to thank you all for watching. Please don't forget to give me a thumbs up. Please click down below to subscribe. Leave some comments. I reply to every comment that you post. And what I'd like to do too is in the comments down below, give me some topics you want me to talk about. Where do you have the most confusion? What area of the business? Is it rates? Is it programs? Down payment? How to buy a house? Do you need help with finding a realtor, an attorney? You need credit help? Anything you need, I promise you I'll do my best to help. So God bless. Take care. Have a great night. Be safe. Be healthy. See you tomorrow. Same time, same place. Bye-bye.